What's up, traders? My name is John, and in this video we're going to talk about my strategy for trading NASDAQ futures. When you're trading the NASDAQ, you have to have a strategy, an edge, something that gives you confidence in the market, letting you know which direction you think the market's going to go. Typically, this involves indicators. Anything can be an edge. There are candlestick patterns. There's so much indicators. There's EMAs. There are pivot levels. There's just a lot of things. But today we're going to focus on the 9 EMA and 21 EMA. This is really the main strategy that I focus on when I'm trading in the charts. A lot of very successful traders trade the 9 and 21 EMA. Some of the most successful traders trade the 9 and 21 EMA. So the 9 EMA is a 9-bar sticky indicator. It's a line on your chart. As you can see on my chart, it is the green line here, and it's pretty sticky. It tends to stick pretty close to price. So when the 9 EMA, when the price is above the 9 EMA, you're looking to go long. When price is below the 9 EMA, you're looking to go short. Now, this doesn't mean that you're going to win every trade. So if you would have went short here and tried to trade this, you would have been stopped out unless you're, taking profits pretty quickly. The goal here is to buy when price is above and sell when price is below. The 9 EMA is a highly responsive indicator that reacts to fast price movements on the charts. And again, you are selling when it's below and buying when it's above. When you first start this strategy, you may want to take base hits, 5 points, 10 points, whatever. Trade it with micros and 10, 20, 30 bucks here and there. All right, to add the 9 EMA on NinjaTrader, you're gonna go up to the indicators tab. That's this button here. And then you will scroll down all the way until you see the E's, and it's alphabetical order on NinjaTrader. But if you double click this, you're adding an EMA. So you can put the period is the 9, which is what we're adding to the chart now. So you're gonna change that to a 9. And then you want it on bar close. And then if it's recommended that you change the color to something that you're gonna remember that you're trading the 9 EMA. You want this to stick out, and you wanna know that it's the actual 9. So typically for me, it's real sticky and closer to price, so I like to keep it green. So you'll click this button here and choose green. And then the width, 3 is a good width. I like to make sure I can see the line. All right, so I canceled that because I already have the 9 EMA. Like I said, buy when price closes above the 9 EMA, and sell when price closes below the EMA. Now let's add another indicator. We're gonna go with the 21 indicator. You're gonna do the same thing that I showed you, but over here, you're going to put 21 on bar close and your thickness and color. I like white, and then cancel here. You would hit apply. I just hit cancel because I already have the 21 EMA on my chart. So as you can see here, price is above the 9 EMA and above the 21 EMA. Now this is a strategy in itself, being above, but adding confluence. Let's go down even further. So earlier in the day, we were shorting the market because the 9 EMA was below the 21 and price closed below the 9 EMA. So we are shorting the market. Here we are. We have a rejection candle here. This is one confluence, and then price closed at the EMA. Retraced, didn't quite make it out above the 9 EMA, so we didn't enter an order. The goal is to make your move whenever price is above. I'm gonna switch over to the 5-minute real quick. It's the same thing no matter what chart time frame you're using, but here we are. The rejection candle here, price is going up. Here's the bullish candle that closed above the 9 EMA. So once this candle closed, we enter an order to buy because number 1, we had the rejection candle here. That was one confluence. Number 2, price closed above the 9 EMA and the 21 EMA. And then number 3, on this candle here, you can wait until you get the cross. You don't have to, but typically I like to wait until I get the cross for any kind of bullish move or bearish move, down or up. But the goal here is to wait for the cross. Once it crosses, that's third confluence. Confluence 1, wick, rejection. Confluence 2, big bullish candle, closes above the 9 and 21 EMA. Confluence number 3, the cross. 9 EMA crosses over the 21. 21 is 21 bars of price averaged, and it shows the average price of 21 bars. So when it crosses, I definitely get long. And I try to hold as long as I can sometimes, but a lot of times I'm taking base hits. As you can see, we are good in the green, 441 on a funded account. The rest of these accounts are evals. I'm trying to build up my funded. So if I would have stayed in this trade all from here all the way up, we would have had a wonderful day of trading. Nice, nice, nice. So when do you get out? Stop loss for me, if I would have gotten in at this cross, I would have put my stop loss at the bottom of this candle and then rode it until we hit the white candle, which is the 21 EMA. So when price moves up real strong, you can take profits at any time, and then you can wait for it to reject and then hit the 21 EMA again, which is the white line. Buy again, buy, wait for it to cross again or touch the 21 EMA again. The goal is to stay in as long as you can. Now, price does kind of move sideways. When price is moving sideways, the EMA lines are kind of sideways as well. I try not to enter, but there is another strategy that I play. So I do play the up and down barcoding style candles here. But let me go down to the 2 minute real quick. As you can see, price is sideways. Right now, price is sideways. So you can't really trade the 9 EMA strategy. You can, but you might get stopped out. It's kind of trending sideways. When the lines are moving left to right, not really in an upward momentum direction, then you want to kind of stay out of the market. I know it's showing a little upward movement, so you can trade. If you do trade, I would trade bounces off the 21. And as you can see, price kind of stuck to the 9, and then when it hits the 21, it rejects, goes up. Hits the 21, rejects, goes up. Hits the 21, rejects, and goes up. It doesn't have to be a perfect science. You can get in somewhere, within the candle, and then kind of dollar cost your average your way in and do it that way. That's kind of what I do, but price is moving sideways. Here we have a bullish bump up, so now it might be time to buy. But today overall we are green, and the market is green as well. It's pushing up, so I'm only looking for buys until it breaks below this 21 EMA, which it did here, but we're still moving kind of sideways. Price is trying to consolidate. It's trying to, I don't know what it's trying to do. It's just moving sideways. Until it breaks out, we don't want to get into a trade. If we came into the market at this time, I'm not getting in the market where the EMA lines are too close to each other. But of course, we do have the 9 EMA above the white 21, so we are looking for longs. You could have gotten in at the close of this candle here and had a successful trade all the way up here. And then even still, the market barely touches here. You could have had your stop there or got out once the line touched the 21. But key is to be patient and just let your trade play out to make more money in the market. Now, when this candle right here showed itself, I was a little concerned, I'm not gonna lie. It looked like price was trying to break down to the downside. When I see long wicks, that kind of scares me, and I try not to trade for a little while. But you see how it recovered, kept going up, and then consolidated for a little while, and now it's booming again. So, it does a lot of weird stuff, but we're still moving up on the day. The trend, the bias is long. However, we're moving a little sideways, so I'm gonna be a little patient. I may enter on this retrace here. Let's go ahead and do that actually. Show you kind of how I trade the EMA. I like to give myself a little more room. I'm trading one contract. What I'll do is I'll do a buy limit here,
Order submitted.
buy limit here,
Order submitted.
buy limit here,
Order
and we'll move them a
submitted.
little closer. And yeah, so once price comes down and rejects, if it hits the 21 EMA and comes down further, I kind of want to get out of the trade. As you can see, it hit right here, went a little below with the wick, but it retraced. So I like to give it a little room just in case it wants to sweep the candle, the wick down. I don't like being swept out by wicks. If price is going to go up, then price is going to go up, and I want to be in the trade. But so yeah, that's how you do it. Price is above the green, we're buying. So far, we're $25, $30 in the green. You can take that as a base hit and take your profits and run. I like to take base hits, 20, 30, 40, 50, $60, especially when we're moving sideways. I don't know the direction of the market. I can't tell you how long it's going to be going up or how long it's going to be going down. All I can say is I trade a certain edge and strategy, and that's what I trade. Stick to your plan. Don't break your rules. Make it happen. I really hope you enjoyed this video. If you want more content like this, be sure to like, subscribe, tick the notification bell icon, and we'll see you in the next video.